Tax season is here, and while some people look forward to spring flowers, most of us are just hoping for a decent refund. Joining us today is financial planner Mark Lamkin, here to share 4 of the most underused tax deductions for older Americans. And it's so great to have you in studio today, Mark. Thanks for joining us.
Thanks for having me, as always.
So it is, the best time of the year, right? Getting all those tax documents, making sure, they're in the mailbox, or a lot of times now they're just online, which is so great. But tell us about some of these deductions that a lot of people kind of forget about when it comes to tax season.
Well, I have to give it a little bit of a disclaimer first.
Okay.
So tax avoidance and tax evasion, the difference is prison, okay? So we're focused on deductions, not indictments.
Yes.
I'm not a CPA, so anything you hear today, I want you to run by your CPA so you understand that.
Right.
But the first one I want to talk about is qualified charitable deductions or contributions.
Yeah.
What that means, it's a big, long word that kind of confuses people. But if you're over the age of 70 and a half or 73 and you have what's called that required minimum distribution, that means that government makes you take a certain amount of money out of your IRA every year. If it's not sent to you and sent directly to your church, or the charity of your choice, blessings in a backpack, whomever that is, it doesn't cost you a dime of taxes. It doesn't cost the charity a dime of taxes. It counts as your RMD. It'll lower taxes on your Social Security, lower your Medicare premium payments or your supplements. So it is a win-win-win. This is the only time the IRS is going to be nice to you.
Really?
So yeah, so make sure if you're over that age and you're giving money, give it through that way.
There you go. Another one is the IRA contributions, even if you don't work.
Yeah, I get this question a lot. So for a lot of years, if you retired as a spouse and one spouse is still working, one's not, you didn't think you can make an IRA contribution. And that's no longer true. As long as one spouse is working, this year in 2025 it's $7,000. Next year it goes to $8,000. But $7,000 this year. If you're over the age of 50, you get an extra $1,000. So that's $8,000 if you're single, $16,000 as a married couple, even if one of you don't work. And if you're 60 to 63 and one big beautiful bill, there may be an extra $2,000 or $3,000 plus in there. So you're talking 20 grand could save you $4,000, $5,000, $6,000 worth of taxes.
Wow.
And most people don't even know they can do it.
Right. And how about the tax credit for the elderly or the disabled?
So big beautiful bill. This is one year that I really encourage people to use a tax professional because tax turbos may not pick all this kind of stuff up.
Right.
I'll give you a couple examples. Like this year, the standard deduction for married couples is $31,500 and singles are like $15,750. On top of that, 2025 first year, singles get an extra $6,000 standard deductions. Married gets an extra $12,000 that's on there. So that literally, that goes right to, takes that income right off. It's going to save that. Here's the other thing. If you're low income, over the age of 65, if you're disabled, for example, I had a client named Andrew that's disabled and had low income, and I helped his CPA and told him about that and saved like $5,000.
Wow.
Now that won't work for everyone, but it's not what you earn, it's what you keep. So anything I can do to help save your viewers and my clients money, we are going to do that.
Yes, you are. And so property tax relief and senior exemptions, what about those?
This is really for people that are turning 65 or 66, 67. You get that Homestead Act. So you get to lower the value of your house by about $49,000. But here's the catch, Elle. The PVA is not going to say, hey, Elle, you just turned 65. We're going to give you free money.
Right. No one's going to do that.
No. You've got to go to the PVA. You got to sign up. You got to make sure you get it. You got to make sure you ask for it. And if you never have, you're paying extra taxes. That's $500, $600, $700 every single year.
Oh my
So know the tax laws. And again, with this one big, beautiful bill, there are so many loopholes, so many tax changes. This is 1 year. Listen to nothing else I say. Use a really good tax professional that knows that bill.
Right. And, on top of that, what is just the biggest mistake people make when it comes to filing their taxes? What would you say?
Thinking everything stays the same. Midterm elections this year, every time we get new politicians, every single year, I mean, the tax book is this big, right? I don't do my own taxes. So if you get divorced, if you lose that dependent, if your income changes, there's so many variations of taxes. So make sure you use that qualified professionals. Look, I'm happy to pay taxes in the country, but I'm just as happy paying half as much, right? I just don't want to go to jail, right? So
yes, do it right, do it correctly, and you don't have to do it again. And the IRS tracking you down. We do not want that this year.
use
or
a
any
tax,
year.
use a tax professional, and you're going to be fine.
There we go, Mark. Always
Thank
a
you.
pleasure. Thank you so much for joining us today. So again, get in touch with your tax professional and get these taxes done. And get in touch with Mark if you want any other financial advice over at lamkinwealth.com.
Wealth Wednesday on Great Day Live is sponsored by Lamkin Wealth Management.